headlines. Back to you.
All right, Nicole and Charles, thank you. Microsoft's bid to buy Yahoo for $45 billion has some privacy groups promising to put up a fight before U.S. regulators to block it. The deal would create a near-internet duopoly in online advertising, with Google over here and Microsoft with Yahoo over here, giving them both these companies a lot of power. Microsoft could also face challenges in Europe when it tries to win approval for the deal from European competition regulators. And here to talk more about the regulatory hurdles surrounding the possible Microsoft-Yahoo deal and what it could mean for the markets, our M&A advisor, Roger Aguinaldo. It's just M&A advisor, right? That's it. Okay, good. And David Riley, Director of Portfolio Strategies at Ridex. Welcome, guys. Roger, let me start with you. What are some of the regulatory hurdles for the Microsoft-Yahoo deal, and what are some of the shareholder hurdles?
Well, first of all, Microsoft-Yahoo deal is far from a done deal, as you know. It is a hostile takeover by Microsoft. They have to face shareholder approval, both first with the board of Yahoo. Board of Yahoo has to approve it. Then the shareholders have to approve the transaction. And then after all of that, then they get to go and see if the regulators approve or disapprove of the merger. All
right, what are some of the big issues for the regulators?
The regulators are looking pretty much at what is happening with competition. Basically, is the competition going to decrease as a result of this merger?
And not in where? And you mean online advertising, and also in some of the places that Google's talking about, like instant messaging and email?
They're going to look at all the different segments of the industry. So if it's online advertising, if it's email, if it's internet, they're going to look at all of those buckets. And if they see any decrease in the competition in any of one of those areas, they may, for instance, say, yes, Microsoft, you can buy Yahoo. However, you may have to sell off your portion of online advertising, let's say, for instance,
or put in some consumer protections or something like that. All right. Well, David, how important is this deal to the markets? Because when it came out on Friday, it sure seemed to help.
Yeah, there's no question it helped. I mean, the size of the deal itself at $45 billion is too big to be ignored. I think the deal is important for the markets from a different perspective. That is if it fails. If it fails, I think you'll probably see an unhappy market reaction. I think there's a big incentive to say, okay, this brings back the M&A era. This is a harbinger of a lot of deals to come. If you look at it, it appears to be much more driven by Microsoft's perceived competitiveness in the internet space, internet search space, and their desire to get back into that game, rather than a harbinger of a wave of mergers and acquisitions, which you really need cheaper money in order to see that happen.
On the regulatory side, do you think the deal will get done if Microsoft and Yahoo can come to terms?
My guess is that it probably will get done here in the U.S. You touched on it earlier. The antitrust environment in Europe is far more strict than it is here in the U.S. They approach that with a different philosophical viewpoint than we do. So I think if there are antitrust concerns, it's likely to come from the regulators in the Eurozone.
But ultimately, you think that Microsoft handles them? I mean, it took 10 years for them to put the antitrust case to bed in the EU. So eventually it could, Roger, right?
Well, Google is facing their own antitrust concerns in Europe
with the DoubleClick
acquisition. So they're still waiting for approval from the EU. So, you know, I agree with David that there might be some concerns on the EU side versus the U.S. for the Microsoft-Yahoo deal.
David just referred to the possibility of this maybe or maybe not generating additional deals in the tech sector. You know, we have seen Google and DoubleClick get together. Now we have Microsoft trying to get Yahoo. One of the big questions people have is, what about AOL? We have Jeff Bewkes, the new CEO of Time Warner, announcing the company's earnings tomorrow, I believe, so he'll have a conference call. What could happen to AOL, for example?
Well, they could be. Time Warner has been looking perhaps for a suitor for that, a buyer for that. Google may step in as a result of this kind of transaction if Microsoft and Yahoo were to get together. So that is a possibility.
And any other companies out there that might be attractive acquisition or merger targets, David or Roger?
Well, I think a lot of the merger and acquisition waves that you've seen in tech in the past has been driven by the desire to get on board with the next new thing. That's not what's happening here. The mergers you're seeing here and the possible one we're talking about are really driven by desires to be more competitive in the space that they're in right now. So it's hard to take that, in my opinion, and translate it out into a larger merger wave.
Well, then what does this do for tech stocks potentially, David? Does it help tech stocks? Techs have been coming back a bit.
Yeah. Well, it certainly doesn't hurt. There's no question about that. Mergers are fuel for stock price appreciation. I think the bigger picture, though, is that if you look at the earnings outlook for tech compared to a lot of other sectors, particularly financials, it looks pretty good. And the other thing that tech has continued to benefit from is a revenue exposure to overseas growth. I mean, if you look at tech as a sector, about 50% of revenues tend to be sourced outside of the U.S., and that's where the growth is right now. So that's an area that I think you've got to look at in a much more difficult environment.
Well, we saw that in HP and in Hewlett-Packard, but in companies like Apple, for example, we've seen some rough waters for Apple.
Right.
Google has just gotten clobbered here, both out of some revenue concerns.
Right.
David, what is Ridex looking at as far as any stocks it can recommend, tech stocks it can recommend right now?
We tend to approach stock selection on an index or model basis. So we're a little bit different than most money managers. We don't really engage in much, if any, fundamental analysis. But what we tend to do is look at momentum of sectors and industries as opposed to individual companies. Now, we do build some momentum into our stock selection models, but we tend to approach that a little bit differently from a higher level.
And the approach is what? More tech?
We have one product called our Sector Rotation Fund, and it has bought into tech based upon price momentum. If that price momentum flags, we'll lighten up on it.
All right, David and Roger, thanks for your insights this morning. We're going to have you back a little bit later in the show to talk some more, and we will talk about the obstacles Microsoft's facing in its bid for Yahoo in the next hour on Money for Breakfast. And coming up after the break, we'll tell you the 3 things you need to know before heading out the door this morning. Stay with us.